Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, last week on Wall Street, we saw the return of some significant volatility on concerns that the Fed will raise rates or start tapering, perhaps sooner than expected. Today, overnight stocks bounced back in a big way. The Dow up 1.7%, the S&P up 1.4%. What's the story in the global markets?
Right. As you said, last Friday, U.S. market corrected quite significantly because of two reasons. Number one was that the possibility of raising interest rate earlier than expected. And it was mentioned that it might happen actually at the end of year 2022. And that kind of made some concern about the interest rate rising faster than expected. That was the concern. However, the probably more another reasons that affected the market to correct quite significantly on Friday was because that day was the quadruple witching day, where these futures and options were closing. And I think that was just temporarily impact because if you look at the interest rate movement, we did see the interest rate volatility happen, but nevertheless, the 10-year government bond rate's at only 1.5%. If you're really keen and worried about the inflation pressure and the rate hike, then that interest rate should have risen much faster and greater because at the beginning of this year, it did rise as high as 1.77%. So I don't think the market is really thinking that the inflation environment is that significant, that inflation kind of the concern has peaked already, and that it's stabilizing. And that is the reason why on Monday, a U.S. market rose quite significantly. If you look at the Dow Jones, it was up by 1.8%. S&P 500 also went up 1.4%. NASDAQ was up 0.8%. The reason that the NASDAQ was up only slightly is because NASDAQ was one of the better performing sectors since the beginning of June. All in all, Fed Chair Jerome Powell will say and remark at the House hearing on Tuesday, reiterating that central bank will continue to be supportive and continue to provide liquidity in order to sustain the improvement of economy. And their expectation and view is that the inflation that coming through right now is transitory and it's not going to last for a long time. As we have seen, the labor market is quite weak yet, and the salary increase and most of the labor market improvement is to the limit of where the inflation is not going to hit well above 2%, despite all the recovery that's happening at the current point in time. So therefore, this is kind of a Goldilocks period where the growth rate is modest and inflation is modest, and that affects the equity market to be looking quite good. So we do expect the U.S. equity market to continue to do better in the future.
Well, today, Korean stocks are up too. Much of the same issues at play, it seems. The KOSPI up around 0.75%, more than making up for yesterday's decline. Tell us about the domestic market.
Right. Yesterday, KOSPI did correct quite a bit because of that jitter that we saw on Friday of U.S. market. And that, as given the fact that the Korea's national retail debt as a percentage of GDP is very high, obviously they're keen about what's happening to the U.S. interest rate and liquidity conditions. If the U.S. tightened faster than expected, then obviously BOK needs to do it even faster, and that has resulted into a concern on Monday. However, as I said, expectation of rate hike and the tapering and all that is not going to happen. Anything related to that, it's not going to happen until next year, particularly for the tapering. It might happen next year, but as far as the interest rate hike, it's not going to happen probably until towards the second half of year 23. If that's the case, then Korea has ample room to remain where we are and enjoy what's happening to the economic growth. Global economic recovery is happening, and therefore Korea is one of the better economy that's showing growth rate ever since the COVID-19. So if that's the case, Korean market is going to do well as it did today. KOSPI was up about 0.7%. And based on our analysis on fundamental as well as liquidity, we do think that KOSPI can break 3,600 level before the end of this year because the fundamental is so strong. Also, if you look at the COVID-19 cases, it has fallen quite significantly to only 357 cases on Monday, clearly showing that Korea's domestic consumption is going to be in the right track to recover. So all in all, we do think that KOSPI looks even better than U.S. market, and that the foreign investors are not going to be a major seller of Korean market, despite there's concern about the currency.
One thing that could be a factor going forward, we saw this last week, but talk about the Fed raising rates has the dollar index bouncing back from around 90 to around 92, and that means the Korean won is weaker against the dollar. The exchange rate now around 11.32. This could encourage the Bank of Korea to move first on rates, perhaps, to prevent instability. What do you see happening with foreign exchange and the possibility of the won weakening further?
Right. I don't think that is going to do anything to Korea because in the later years of Korea, we did see that the Korean won do go to 1,200 level. And they don't think that is a break point where the BOK needs to tighten monetary policy and raise interest rate because of concern that the money is going to flow out of Korea. The reason for that is because Korea continues to have a very strong fundamentals, and therefore it really depends on what happens to the U.S. dollar. Now, yes, U.S. dollar did appreciate from about 90 territories, but that's the low end of the dollar. I think that the dollar can move anywhere between 90 to 100. We've seen that happen in the last several years. So unless the U.S. dollar strengthens well above 100 and that it goes up to, say, 100 to 110 and then 120, that's what happened to the dot-com bubble era where dollar strengthening has resulted into a huge improvement of the IT sector of U.S. Rather than money flowing into the emerging market. So, yes, there is a bit of concern about the Korean won depreciating to 11.30, and that U.S. dollar appreciating to about 92 index. We don't think that that's going to do much more significantly in the future, that it's going to stabilize where we are. If that's the case, then the currency is not going to affect anything significantly to the equity market in general. Also, if you look at the Korea's economic growth rate, it's pretty much similar to what's happening to U.S., or even better. So therefore, even though there's a concern about the consumer debt being high, we think the Korean economy is strong enough and fundamentals strong enough that Korean won should not depreciate much further than what has happened in the recent few months or so. So right now we are at 11.30. If it opens up to maybe 11.50, that might be the peak. That is not going to result into any kind of interest rate hike for Korea. So therefore, we shouldn't be too keen about this, the Korean won or dollar rate at the current point in time. Of course, if we do see that the dollar goes up to 100 plus, that Korean won goes to 1,200 level, then we should start to worry very heavily. But at the current point in time, we shouldn't be.
Well, finally, Mr. Yu, in the past week, the price of Bitcoin's come down from around $40,000 now to around $32,000 or a little lower. China's continued its crackdown on crypto. What explains this decline in the crypto prices?
Right. As I said before many times, we should look at the cryptocurrency as a part of alternative assets. In the past, the alternative assets were gold and silver. Obviously, that those prices go up when the period where the money supply goes up to very high number. And we did see the MO growth rate and M1 growth rate to rise significantly. Last year was more than 40% growth in M1. This year you're looking at about 20% growth. If that happens, then the value of currency goes down, and therefore the value of alternative asset goes up. So it shouldn't push the prices of gold and silver up very significantly. However, though, introduction of the cryptocurrency and the cryptocurrency becoming one of the part of the alternative assets where money can be transacted and used as transactions, and the supply they thought was quite limited for cryptocurrencies. That was the reason why the cryptocurrencies or Bitcoin were called as the digital gold. So, however, though, nowadays, if you see these crackdown happening, where Chinese government as well as U.S. government are all going to be keen about reducing any kind of illegal activity using the cryptocurrencies. We did see quite a bit of money laundering and a lot of the criminal activities happening related to this. And obviously, if that's the case, then government's going to tackle down on this. We're not going to have a currency where the government is going to be negatively affected as a sovereign government in a sense. So therefore, I don't think that the government or central banks of any countries are going to allow the size of the Bitcoin or the cryptocurrency to rise to the significant level that it's going to substitute all of the gold or silver. So being said, if we did see the gold prices going up, then obviously it's a room for the cryptocurrencies to go down. Right now, it is only about 15% of the total gold is the cryptocurrency market. So we do need to look at that as adding all these three alternative asset, gold, silver, and cryptocurrency, and then assume that the total value goes up as the money supply growth rate goes up or goes down. It depends on how much the money supply increases. That should be the effect to the overall alternative asset size. So having said that, right now we're looking at about 10% growth rate of the M1 growth rate going into long-term future. If that's the case, the alternative asset growth should be in that area. If the gold prices goes up by 5%, then obviously cryptocurrency prices are not going to go up much higher. So we got to look at that as kind of substituting each other at the current point in time.
Very interesting. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much, as always, for sharing your insights with us.
Thank you very much.